Gears then and talk a little bit more about the outlook in the primary markets and Sai Silks as well. You saw the issue that has been decently subscribed. Let's understand a little bit more about the business as well as the growth outlook for the sector as a whole. We've got with us in our studios Bharadwaj Rachamadugu, who is the Senior VP Sai Silks. Good to have you on board. Thanks so much for taking time out. I just wanted to talk about the Indian ethnic wear as a whole in terms of what kind of opportunity you see for the company and what is the growth roadmap for FY24?
Ma'am, talking about Kalamandir, we see that we operate in the women's ethnic wears, especially saris. We sell about 66% of our revenue comes from saris, and the 33% comes from non-sari categories in the ethnic wear segment. With that same vision, that's when we started Kalamandir in 2005, targeting the middle income class segment. And soon we've expanded into 4 formats targeting different niche segments. And our product range also starts from 200 rupees to 4 lakh rupees saris as well. Talking about that, the industry is seeing a good growth rate of about 8%. And we operate in the South Indian market as of now. We have 54 stores in 4 states of South India. And these stores are doing phenomenally well. With that same vision, we are entering now into Tamil Nadu market, which has a combined potential of Andhra and Telangana put together. So we have about 4 stores today as we speak right now, and we plan to open about 25 of Varamahalakshmi Silk store and 5 of Kalamandir stores in these markets. And Tamil Nadu, as we speak, has a great potential. Our old 4 stores are also doing phenomenally well. So it gives a strong indicator for us to see a good growth in the near future.
Purpose of your IPO? How is it that you're going to be deploying the funds?
We plan to use the major funds in the primary by opening 30 new stores. Okay, around 400 crores is going towards setting up of new stores, including capital expenditure as working capital as well. We plan to release a 50 crore long-term debt, and the remaining entire amount is going towards improvisation of gross margins. We plan to do that by leveraging cash discounts and volume discounts with our weaver and vendor community.
So you could have gone to a bank and taking working capital loan. Why come to the equity market?
Sir, historically, if you've seen, the company has grown in a gradual manner as we speak continuously on an internal accrual basis. As we speak currently, entire company is owned by the promoter and the promoter group itself. And what we've understood right now is Tamil Nadu as a market has a strategic advantage because you've seen industry giants playing in this market, be it Nallis, be it Pothys, who have heritage of more than 70, 80 years. So with that strategy, 10 years ago, we opened 2 stores. We knew that Tamil Nadu market is a very, very big market, and the idea right now is to always go in a cluster model in the Tamil Nadu market to expand, penetrate much deeper into it. And in terms of a little bit aggressive strategy and the bank funding, there's a certain cap in terms of the bank limitations and in terms of bank funding. And that's the reason we believe our model is now mature and we have enough bandwidth within our own ecosystem to help us expand to those new geographies right now. And we believe that this is the right time to unlock the wealth as well.
And there is no PE investor exit in this. This is pure promoter holding which will be coming down.
Absolutely, sir. Yes.
Do you have PE investors in the company?
We do not have any PE investors in the company. I think we currently have about 4.5% of the shares being given to our employee trust. Rest entire thing is with the promoter group itself.
Okay. In terms of the size of the South Indian brands, I mean, you've just spoken about 3 brands. Nallis is perhaps something which my recall has been the highest. Right. How would you stack up in terms of size and in terms of growth?
Sir, in terms of size, if you're talking about revenues, I think MCA data is what we could refer to because
that's only one
publicly available data. I don't want to comment much because they have other categories as well as far as I know, not just apparel. They have other jewelry categories to the best of my knowledge. But for us, it's completely apparel play. It's majorly saris and the rest of it also coming from the apparel. So in terms of like-to-like comparison, in terms of listed peers and listed space, there's nobody else I could probably put down into. But broadly, if you have to classify them, each of our formats have a different competition. Like for example, in the likes of Varamahalakshmi Silks, Nallis would be competing. Maybe Pothys would compete with Kalamandir as a brand, and KLM Fashion Mall. I mean, we also have regional players as well. For Kalamandir, there's somebody called RS Brothers. They are again a regional player here. So the competition comes in all shapes and sizes. And talking about the likes of Tatas and Reliance, talking about Taneira, Avantra, they're betting big on saris. That tells that the market is growing great towards in terms of the ethnic Indian apparel.
The number what we have it is 28 times, and that's a very reasonable P multiple. Normally when companies they go public, they use benchmark. So what is your benchmark? I'm trying to understand here because there is no real benchmark for you.
Absolutely.
A lot of companies which are there, they are not listed and data is not available. So when you arrived at the price of about 30 times, how did you benchmark it?
So again, what we've done is go with the help of the BRLMs in terms of doing a price discovery research. We have met funds, domestic, international funds, and based on their guidance is what we came up. We landed up to this pricing, and we believe this pricing is derived based on whatever the response that we got. And if you look at our anchor book, we've got phenomenal response from one of the marquee investors as we speak, and these guys have both domestic and international presence, and them trying to believe in our story, they're trying to like our story is a testament that we are in safe hands.
Well, when is it that you would look to penetrate the other parts of the country as well? Because like you or yourself said, big players like Tatas are in the market already with their brands, Tanera, and they have the jewelry to go along with the apparel segment as well. So when do you move beyond the TN geography?
As we speak, ma'am, I think the DRHP and the RHP limitations, I'm only talking about the next 2 years, these 30 stores. But we chose South India to begin our journey. If you look at strategically, right now we're selling 2/3 is saris and 1/3 is coming from non-sari categories. The core of what we do is I think the company is safe to say that we are more like a technology company trying to sell Indian ethnic wear. Because we believe when we try to enter into newer markets, we do a thorough analysis in terms of target market, in terms of product mix that needs to go in each and every store. Hypothetically, if I have to enter into newer geographies, my product mix will change based on the local geographical preferences. But we definitely, once we are able to cover the South Indian market, we'll slowly start coming into the other markets as well. Today, if you look at our 54 stores, is only coming from less than 12 cities. If you have to talk about Tamil Nadu, we have any presence. In terms of Kerala, we have not even there. These are also the markets that for us, we can penetrate much deeper into these markets. Beyond this, there's definitely the entire pan-India presence will definitely be there. And to your question of what about Tatas and Reliance, I think what's happening is major shift is going towards unorganized to organized. And these players are actually the key drivers for us to go there. We believe because sari as a market needs to be connected with the roots, because we procure our products from more than 80 cities. We have a weaver and vendor network across north, east, west, south. Wherever a sari gets weaved, we tend to be there. With the help of our technology, with the help of our sourcing support, we believe by the time the other players expand into other markets, it will become a level playing field. And because we have organized practices that we follow, we will be a good competition in these newer markets whenever we enter into that market as well.
But don't you think you, like the Tatas, will also have to eventually try and diversify your portfolio, not just apparels, but jewelry and other segments as well, eventually?
Ma'am, for us, I think the model has been very focused in terms of selling saris and apparel wear to begin with. We believe generally what happens is we do not want to diversify into other categories at this point of time. We believe there's a great amount of growth that's been backed up by SSGs and the industry growth, plus the unorganized to organized shift. So at this point of time in near future, we do not see any kind of diversification in terms of our product profile.
And what about your financials? How long does it take for a new store to break even? You have a PAT in FY23 of about 98 crore rupees. How do you see that scaling up, and your revenues of 1,300?
If I have to give you an example of a Varamahalakshmi Silk, generally every format is different. Let me just give you an example with one of the formats, Varamahalakshmi Silk's format. Varamahalakshmi Silk format, the capex requirement will be around 5,000 is the average square feet, and 5,000 rupees will be the average per square feet capex cost. So that puts about 2.5 crores. And the inventory requirement will be around 20,000 rupees per square feet. That's around 10 crores. So broadly around 12.5 crores of investment per store. Talking about break even, Varamahalakshmi Silks does about 50,000 rupees per square feet. 48,000 rupees per square feet is the average revenue per square feet, which is much higher than any organized or unorganized players where we see. And with that number, I think it's safe to say that capex payback will be around 4 months to 5 months. And with respect to the inventory, it will be around 16 to 18 months.
Wish you all the best. Thanks so much for taking time out and joining us in our studios.
Thanks
That's
for
the view coming in
Thank you.
from Sai Silks.